Good evening, this is David DT, Trading-to-Win.com. You're looking at slightly redesigned site. I finally managed to install Discuss Common System, and I'm happy to see that a lot of people who wanted to talk trading, mostly trading, are gathering here and having a good time and trying to make money and help each other. So you're all welcome to come by and take part in it. We're looking at S&P 500 monthly chart. Last time I believe I talked about it back in August, and in August I mentioned that we might complete WB of monthly wave up somewhere in November, as long as November close going to be slightly highest close. We're getting really close to that point. I'll be talking about that a little later on, but I think market is going to correct from here on. Also, as you can see, we are at the bar 6 of potential TD setup sell. Also, horizontal volume resistance is coming over. Basically have to extend it, then you will see that starting from this area, the easy part of moving up is basically over. Now this is the weekly S&P 500 chart. As you can see right now, we on, let me zoom in a little bit. Right now we on bar 13 of TD sequential come down sell, and of course you may ask why I'm using this setup with consecutive come down and not the most current setup. The answer is, in spite of current setup partially being qualified to be used as a recent setup, it has never been completed. There was no bearish price flip, so it's still in progress. 1, 2, blah blah blah, 9. This is 10, 11, 12. So then 14 and 15, at least I can count, but what it shows, it just shows market craze based on the value dollar and pulling easy, no interest given money, well, taking money from taxpayers to anything and everything. Anyhow, the sequential countdown was designed to work with trends, and 13 might just spot real price exhaustion. If we zoom in, we're also going to see that the prior W2 retracement was somewhere in between of 62 and 50, and this is where we're right now, in between 62 and 50. So I don't know how much value that brings, but well, maybe just coincidental. Another thing on the weekly, if you look, then again this area from 1088 to 1090, no easy move up, price congestion, long-term investors going to be making decision right now. And I normally say the idiots who sold on the way down and idiots who bought on the way up, that's what formed V bottom. And now probably a lot of people going to think that equities are fairly priced. That's another reason for a few months sideways consolidation at least, but we will know. Another thing is, in spite of parabolic move from March lows, as you can see, RSI is still below 60 on a weekly chart. There is no conviction, there is no strength in this rally. This is just, you know, everybody just trying to place disappearing dollars is something else. You know, once again, people who sold on the way down feel pretty stupid, and they buy on the way up. I don't know, they're probably going to feel pretty stupid again. You know, once stupid, twice stupid, forever stupid. And this is a quick look at S&P 500 daily chart. As you can see, I've been talking about WC. Unfortunately, my software only print C wave till the moment when it's so to say locked up. So basically the calculated target is somewhere 11.13. Let me pull down. 11.13. Let's say somewhere here. And what is funny, that blue line is the target for W3 up, that green one. So no matter whether we in new up sequence or just ending down wave sequence, they point to pretty much the same level, somewhere in between 11.10 and 11.20. And to add to that, we basically again have sequential count 11. The current one really might not 12, but we might have 13 by the end of the week. So if that is going to work out, we're probably going to move first to somewhere 10.50 area, and we'll take it from there. As you can see, not a single sell-off before printed WF4 on a weekly. What it tells me, well, I don't know, we still might be here in down wave sequence, or we might be printing up wave sequence. And as you can see, RSI really failing right here. In spite of putting new highs, RSI is not moving up, but it's difficult to compare. Normally I like to compare between W3 and W5 to spot some failure swings. Here this is just an observation. And finally, this is another S&P 500 weekly chart, just to illustrate the channels. As you can see, that yellow channel we were following for a while, not long important obviously. This uptrending channel, that midline holds significance right now, and the blue channel, which was in place once again from 2007 over the highs and multiple lows. S&P is very close to the upper boundaries of this channel, pushing midline of white channel. That green circle was my price target for a long time. As you can see, two green circles been hit. Red circle target slightly off, but channels holding up pretty well. What's going to happen? I think we're going to retreat first to 88 weeks moving average, which is going to put us again somewhere in 10.50, 10.55 range, and then we're going to retest that channel again. And if it's not really up wave sequence, which is going to put us to 12.50 area and just a termination of WC wave, then we're going to go somewhere to 9.50, and we're probably going to be moving sideways for a while, for a few months, to complete monthly sell setup. That's basically everything I wanted to say for today. My apology for my voice. I'm having a horrible cold, plus to my accent, so you will have to listen a few times if you want to. Trade well. David DT, Trading-to-Win.com.